Welcome to Alpha Wave Finance on July 8, 2025. A day that may redefine your investment game. Markets are humming with fresh moves, tariffs resurface, Bitcoin maneuvers shocked investors, and global policy signs are flashing. We're unpacking today's events in a way that makes sense for your money, your mindset, and your future. This isn't just information, it's your strategic advantage. Stick with me to the end to stay ahead and take control. President Trump sent out letters to 14 trading partners warning of new tariffs effective August 1, unless fresh trade deals are cut. Those letters targeted major economies like Japan and South Korea, triggering uncertainty and immediate market reactions. Futures dropped, bond yields wavered, and currency traders moved capital towards safety. This is a high-stakes reminder that trade policy is a market-moving force. For your portfolio, being prepared means staying nimble. Tomorrow's headline could be today's price shock. Despite the warning letters, Asian stock markets held firm. Japan's Nikkei actually rebounded, while Hong Kong and Seoul closed slightly higher. Markets have become used to these trade surprise waves, often pricing in volatility before it arrives, and then riding the relief. That resilience offers a lesson. Volatility isn't always a collapse. It's the opportunity you see when others panic. Timing and confidence are powerful tools, but only if you control them. Oil markets reacted sharply to OPEC Plus announcing an increased output for August, but prices barely budged. It's as if supply concerns elevated, yet demand worries undercut hope. This tug-of-war shows just how fragile the energy outlook remains. If you're in energy stocks or commodities, it's time to dial in. Volatility is not chaos. It's clarity waiting for your plan to use it. Treasury yields surged anew, with the benchmark 10-year note hitting around 4.4%. Investors are juggling tariff uncertainty, rising bond issuance, and inflation whispers. Yield curves are telling a story. Risk prices are shifting. For bondholders or those missing income, this is a flash of both caution and opportunity. Evaluate your fixed income posture before you miss the next pivot point. The US dollar firmed up across global markets, reversing recent losses. Safe haven flows kicked in after the tariff alerts and bond maneuvers. Currency moves often precede asset shifts, and the dollar bounce is a signal that capital may move before you can blink. If your exposure is international, adjust. The greenback is more than a number. It's the market's mood barometer. Bitcoin briefly climbed to 109K on growing inflows into Bitcoin investment products. Such funds recorded a record $790 million this week. That's institutional stamp of approval in motion. Interestingly, this strength comes. MicroStrategy paused its Bitcoin purchases for the first time in months, signaling possible consolidation or strategic recalibration. The pause follows an aggressive buying phase where MicroStrategy added tens of thousands of BTC. Even giants need breathing room, and when they pause, markets notice. That move forces us to ask, is your crypto strategy reactive or proactive? Meanwhile, dormant crypto whales moved over $8.6 billion worth of Bitcoin, just the tip of a mysterious iceberg. These long dormant coins can influence market psychology more than price. Are they moving to liquidate or to secure? We don't know yet, but the activity reminds us that behind every chart is a silent giant. Yours is to watch, not chase. Joe Jennings' Ego Death Capital closed a $100 million fund focused on Bitcoin native software companies. No altcoins, no tokens, just Bitcoin utility. It's a sign that serious money is betting on the tech, not hype. Real-world use is the next frontier, and that's where compound returns come from. If you're in crypto, aim for innovation-backed plays, not fleeting fads. Japanese hotel chain Metaplanet is doubling down, now targeting over 210,000 BTC in treasury by 2027. It's turning hospitality into Bitcoin infrastructure and drawing huge investor attention. That's a strategic pivot on a global scale. Firms like this are rewriting the formula for balance sheet strength with a crypto twist. Can your portfolio do the same? Trump media filed for a crypto blue chip ETF encompassing BTC, ETH, SOL, XRP, and CRO. Politics and crypto are merging fast, and that's raising both investor interest and regulatory eyebrows. If approved, this ETF will accelerate mainstream crypto flows. Timing is everything. With early entry comes edge. Coinbase-backed Kueller secured a $20 million credit line to expand BTC reserves, indicating strong institutional on-ramps. When major players like Coinbase back treasury builds, you know crypto is entering enterprise territory. That gives confidence to long-term strategies. Track corporate reserve moves. They're the silent buy signals. Tokenized gold surpassed $19 billion in trading today, moving beyond traditional gold ETFs. Digital asset evolution is reaching physical assets. As portfolios digitize, don't forget safe haven staples. Tokenization doesn't replace them, it scales them. If you seek bridge assets, tokenized gold blends security with innovation. SEC issued new guidance for crypto ETPs, requiring clearer disclosures around custody and conflicts. That's a win for investor transparency, even if it puts pressure on issuers. A regulated landscape keeps larger dollars flowing. Your advantage? Know the rules before the masses do. Ethereum whales boosted holdings by 9%, driving bullish signals. When whales accumulate, they speak louder than newsroom hype. That's a whisper of confidence in ETH's long-term value. Whether you trade or hold, whales give you clues. Follow those who won't panic. On-chain activity shows BNB chain crossing $1 billion net inflows via cross-chain bridges, leading the pack. That traction matters. Fiat moves into DeFi as users build trust. DeFi may be quiet now, but the structural flows are speaking loud. Monitor bridges. They move capital before headlines do. Reserve One is merging with a SPAC M3 Brigade in a $1 billion deal backed by Galaxy Digital and Kraken. Institutional crypto adoption is surging through capital markets. SPACs still channel big money. Don't dismiss them as flash in the pan. Watch the follow-through, not the flash. Institutional interest shows crypto trading volumes declining, but stablecoin licensing exploding in Hong Kong. Over 40 firms applied for stablecoin licenses. Asia is speeding toward digital assets regulation. For global investors, Asia is where regulation leads to adoption. Your global crypto radar should be tuned east. So this week is a game of timing. Tariff deadline looms, Fed minutes due, OPEC meets next, CPI and consumer credit incoming. It's a crossroads of trade, inflation, crypto, and regulation. Stay nimble, act deliberate, and don't just survive, prosper. Hit like, subscribe, comment what you're watching. Let's ride Alpha Wave together this week.